Hello, it's part 7 of a 7-part series determined to start a sustainable new business in 2023 and 2024. We all been working hard and getting our business information and data and business plans and marketing ideas and website brochures, pictures, business cards. It's been a lot put into it during the last 7 weeks. So thank you so much. We're wrapping it up to this series up tonight with part 7 of 7. We're going to be talking about taxes, depreciation, record keeping, some really good secrets that help you close sales and deals in the future. Plus, we'll be looking back over what we've been talking about for the past 7 weeks. So thank you for joining us here in October in 2023. I'm Steve Carver, talking to you from my home office in Dunn, North Carolina, presentation number 1083. Thank you for joining me on my journey, and let me join you on your journey. Let me tell you again, I am not a lawyer or an accountant. I'm just a fellow here offering you free advice based on my history and experiences and what we've learned and what I've learned from 14 years of working with entrepreneurs just like you. So, best advice I can offer you always is before you make an important decision about your security, your family business, your business financial issues that you're unsure of, then get an opinion, get a second opinion, bounce it off, see what someone with some sense has to say about it, and see how they feel about it. One of the very best places is you can get confidential, good professional business advice is from the small business centers across the state. They're located at your local community college, and we are so fortunate tonight because the Small Business Center in Clinton, North Carolina, at Sampson Community College, where Bart Rice is the director, has sponsored this series. And Bart, we certainly do appreciate you and your center and making it available to pay me to serve these wonderful entrepreneurs. Bart's phone number is at 910-900-4025, and he'll be glad to help you with an appointment or even set you up with some free counseling on whatever subject that you need help with. So let Bart help you, let the center help you. He's got a wonderful associate there, assistant in administration, Elizabeth Sanchez. And she'll be glad to help you set up appointments. And I think she also does some counseling as well. So the study guides hopefully have been emailed to you tonight. They're very important. I think all of them should go in your business journals. Of course, we've got our talking points guide, as always. 40 drill skills, a real important addition with understanding depreciation. And then 25 deductions that anyone in business should know about. A little information on how to earn the certificates, your fall quiz. If you haven't turned your quiz in, you need to do it to qualify for a certificates this fall. There is a study guide there that's explaining the new 10-hour course that's going to start on November 1st, a new course on 5 consecutive Wednesday nights. It's called the Entrepreneur's Advanced Skill Training and Applications course. It will cover very lightly the things we've talked about so far and dig deeper into topics that most people want to know more about and help you in your business. So look that course outline over and sign up for it. We'll see you there as well. Just announcing right now that we're going to have a new 10-hour course, very similar to the ones that we have been talking about that'll start up on November the 7th. It'll be a 6-part series, 12-hour course. Now it will be starting at 6:30 instead of 6 o'clock, so we've got a little difference there. Won't have to get started quite so early. And it will have basically the same topics that we've been talking about the last 7 weeks. However, as you know and you've noticed, every new series that we start, I change them up enough to hopefully to keep them interested, but leave in the basic meat and potatoes that we got to have, but try to give you new information to encourage you to keep coming back if you'd like to. So that will start on November the 7th. But tonight's graduation night, and closing down our first series for certificates and achievements and things like that for the academy and for the community college. So we just had a really good course this fall, and so glad. So far, we got 8 people who looks like will qualify for certificates of achievement, and they're going to be very nice. I was just talking to Sarita, who prints our tickets. This is one of the drafts. See where my cursor is there, Sarita? That's the area I was talking about where we need to get some space in these, right up here at the top. But very nice certificates, and we'll mail them to you, or hopefully maybe even have a gathering where we can meet person to person. So far for academy graduates and what we call our being able to graduate with a graduation certificate, we've got 2 that's qualified so far and 5 that are pending. So we're going to have a good crowd of graduates that are going to become associates in the academy. So congratulations to them. It also will have a very nice certificate that will come along that will look something like this. This fall, just as a summary, we added one last night, I think. So we've had about 28 people involved. 8 are qualifying for achievement certificates, at least 2 for graduation, at least 1, and I think maybe after this week, maybe even as many as 3 get an extra mile certificate for doing extra work. And of course, we only have 1 best in class. So we'll be talking about who that winner is later. But sharing time and efforts and energy with us this fall has been Jeffrey Smith at White Lake, Elizabeth at Clinton, Cheryl down in Elizabethtown, Valerie over in Wilmington, Sarita, of course, in Clinton, Tisha in Magnolia. Casey has done a big, a lot of effort, and she's in Beulahville and actually works in Wilmington. So proud of Casey's work. She sent us a lot of new information this past week with new images and such as that on her website. So proud of her. She put a lot of new information, tells her story now very vividly. Really nice story to be told there. So proud of her doing that. She came forward with her profit centers, listing those down as was required in the homework. And she also put values on them, a menu with values on them from little ticket items at $9 up to big ticket items at $5,000. And I love that. That is a great menu. And there's a chance there to decide you can put together some good money. So proud of you, Penny. You keep up that good work, and I hope you can join us tonight. She did her mission statement, very well done. I love the way she put it in her own language to meet her needs and goals and expectations. She came forward with her own core values. She stretched them out a little bit to make it more than a list of values, but pretty much her priorities, and just very, very well done, well said. And I certainly think that will encourage people to do business with you. Lead by example. I love that. And committed to being an ethical, respectful steward of the land. Can't beat that. That's good talk and very good images there to present it. Then she shows a little human nature there, thanking people for their time. She's letting them know that if you're interested, where you can find us and move forward. So she'll be able to use these pages and images in social media, in her brochures, a lot of other places. So good work that should last you a long time and bring benefits to you. Also, she shared a picture of their Watson, which is their favorite pet. And Watson looks like he's ready to go and very into everything there. Looks like he's got a leaf of cabbage over his head there. That's pretty cool. All right, so good. Then Annette decided to get in gear a couple, 3 weeks ago, and she has decided to start a bookkeeping business, a virtual bookkeeping business called Blessed Bookkeeper. So proud of her. And we've been discussing what her profit centers might be this week, so I know she's being very active. Darcy is wide open, ready to go too. She'd love to have her own florist and trying to get her skills and paraphernalia and her plans involved. So good luck to Darcy. She's been a great student this fall with us. And now the people that looks like they're ready to go for that academy graduation, we got Sabrine with us. Hi, Sabrine. Glad to have you with us tonight with your new business. We really hope it goes well, and And I hope you'll stay in touch and let us help you move it along. And so happy that you shared your videos with us and profit centers. You just helped us get off to a real good start. I'm so grateful, and I hope you'll stay in touch and let us help you again. Pamela got in gear this week as well, sent us a good picture of Pamela over in Rose Hill. She's going to be growing her own products that she'll be selling and cooking to be selling things, so good luck to her. And Latoya, big moves, making them every week. I think you got all your bases covered from the videos and all the other things for a graduation certificate. So thank you so much. Good to have you with us tonight as well, Latoya. And she actually just sent in today a testimonial, thanking Bart and Brad and I for the work that we do in the series. And Latoya, you especially did a great job here to write yours in a way to encourage others to participate, and that's what we need. We need good feedback from folks like you, and these testimonials will allow us to post them on social media. Maybe somebody will read it and decide because of what Latoya said, they will join us. And Supreme and Sarita, I'd appreciate y'all's testimonials as well, so we can get it out there and maybe keep this program going and helping other people as we do. Good new images from Latoya. Thank you so much. I'm proud of what you're doing. That looks good. I think you're getting set to have a great platform. This is new Facebook images, so good to do it. Here's some more good images talking about healthy foods and different things to be thinking about. Very colorful, very eye-catching when it comes to the look and the hook. This is exactly what I'm talking about. Give people something worth looking at, they'll read it, and then hopefully be in touch with you. Janaea White Lake, man, she really came alive during the last 2 weeks. She's been kind of a sleeper in that you can tell from what she posted this week that she's been working on it for months. And so thankful for that. We'll come back to her work, and she's agreed to let me use it as teaching tools as well. We don't mention that we got our first in class award, who's the reigning queen of the Academy right now is Vanessa McIntosh over in Burnsville. She won the first in class award for the spring series, and now we're getting ready to appoint one of y'all guys as the new one. So we'll move forward on that, and I'll announce it as soon as I can. But back to Janae's work, we don't use her as a little teaching tool, so let's do that. First of all, she came forward as well with a great testimonial, and I really appreciate that, and we'll be able to use it to encourage other people to join us. She's got 3 or 4 things going on, and now she's developing 3 or 4 business cards. This is the business card for her cosmetics. And what I noticed here is that she included text me, encouraging people to text her, and that is really important these days. I want y'all to consider doing that because more and more people are doing business, initiating their business with text messages. So you want to have a telephone number that you're posting in your marketing that allows people to do that, and it will indeed bring some customers to you. She also came forward with a new business card for her event and wedding planning business, which I think is her main concerns right now. She's got her phone number in there, but she didn't put text me, so I don't quiz her about that and asked her why not. But very good business card, very elegant, well done. Her homepage on her website, it's kind of a one-page website right now. You just keep scrolling down and down and down, which is just fine. She's got a few links off of it, but right now she's just getting it started. And it is perfect for an opener. So the comments that I'm making tonight about these pages are not criticism. No, they're just ways that I see with maybe some ideas that might help it become a stronger website. So here's her home page, very, very pretty, very good, elegant settings there, which is indicating a very nice formal dinner, no doubt. So images are going to be important, and I encouraged Janae to put, instead of just one image like that, to put a slideshow in there with those images changing about every 6 seconds to let people know that she's got a lot going on here and a lot to offer, which you'll see in a minute. But very good start on the opening on that home page. So notice on the home page that up here in this top right-hand corner, she's got the phone number in. And I know she was just building this and trying to get it online. So one of the things I don't recommend that she do is we need a stronger message on that front page. Your front page must have a strong message to encourage people to get in touch with you now. Remember the look and the hook. Well, the look is great, but the hook is making sure they know they can call you now. So I'm suggesting to her, and I'm sure she'll dress it up and make it prettier. I just wanted this to be a bold image so we could see it very clearly. I wanted her to say, today, call, text, or email me. In other words, let people know that you're not asleep at the wheel or laid back and not expecting to get business, but you're hungry and want business. And you send that message out by putting it out there in big, bold letters. And then as far as another hook is letting folks know that we have dates open now. That is, in other words, there will be some dates that are not open, or maybe tomorrow your date may not be open. So you use statements like that to encourage people to go ahead and call you right away. And then I like to have another way to let folks know that this is not take it or leave it. It's not my way or the highway, but let's discuss all the options. That message is clear, and that, yes, I'd love to talk to you, see what you have in mind, work out a price that'll suit your budget. And then lastly, of course, we'll take the phone call, but let them know the number where they can send the text and where they can send their email. I wanted that to be big and bold enough to fit, but it'll still look good. And I would put that type of message right up in that top corner where she had the phone number. And of course, she'll do it in her colors and her style, but that's the message that I'd like to see her change her homepage, or at least the top of her website with. Now she goes on and uses a method that I use at my website, and I'm so proud of her for doing this, and that she is breaking out the different types of services and considerations someone might have, and putting them in small mini squares, you might say, small marketing messages. And these are the types of photos that you could put up in the slideshow, so that they're always going and have a good heading or title to them. So as that slideshow is going on, people are getting all the messages and the good information about you. You can do a lot of different stuff. Then they'll scroll down and find the box here that applies to that, so they can see what's going on. I like the fact that she is going to be doing destination weddings. That will really be a big ticket item, and give her a lot of opportunity. Of course, it's going to require a lot of work and a lot of responsibility, but still, so glad to see you're considering it. I like the fact that she's putting prices down here for like $2,700 for the things applied in this block, $5,500 for what I guess full service wedding planning. So that's a lot of difference there, and $2,700 and $5,500 are a lot of money. I'll spend some more time on that, but yes, I like the fact, and I appreciate the fact the way she's doing that. She's offering to let people know that she's in tune, that most folks are going to need budget management. Most folks are going to need a lot of planning. And on wedding day, she's even offering to do coordination for 9 hours on the wedding day to make sure, be there and make sure that things run smoothly and organized so that she can do it. The message you want the person that's paying for the wedding to have is, pay me and don't worry about the rest. I got it. I got you back. The way Latoya says, I got you back. We got you covered. So that message needs to be always coming through for 100% satisfaction and a day that you will enjoy and remember forever. Let's do business. Matter of fact, I wouldn't mind seeing a sentence similar to that on the bottom of each one of these marketing blocks that Janae's got up and ready. But really good start so far. She got one space, is right much space on the web page where she's talking about corporate events. Gets into giving a lot of details there about that. I'm encouraging her to revisit that, because in my opinion, there's probably going to be more corporate events type things that she will be able to do in the White Lake area because of several facilities there. And if she promotes them, I think she'll have more corporate events. So they're probably not going to pay as much money or be as demanding, but they will be paying money. and you'll get paid, and maybe the number of them will generate a significant amount of money to help you have a sustainable business. Weddings come and go. People don't do that many times in their lives, but businesses that do it are always holding some type of corporate event. And those businesses might be also family reunions with families, different types of gatherings they might have. It might be church groups or private clubs that might want to do retreats or special events. So that would be something that she could help plan and create that little niche market group of customers. So just something to think about. Now let's look at the individual pages and talk about some things here that kind of struck me. First of all, I was so impressed with the time and energy that she had done in listing down all the things that she'll be able to do for her customer. I mean, the list is endless and goes on and on and on, and very, very impressive. But what I noticed first was the two pricing issues here, $2,700 and $5,500. Those are big ticket items. So let me tell you right now, like I've mentioned to you today, when you have big ticket items like this, you are going to have a lot of competition. That kind of money will create some profit, therefore there will be a lot of competition for it. So even before you get in the business, and I don't know the wedding planning business, but I do know this. When you're selling this type of products with this kind of money and you're marketing on the internet, the competition will find you just like the customers are going to find you. The customers are going to find you and contact you and then contact someone else and say they're also talking with you. So your competition is going to come right straight to your web pages and copy pretty much everything you say you're doing and say they're going to do it too and cut your price a little bit. That's the nature of tough competition. And I want you to do the same thing. As long as it fits and as long as it helps you get business, that's what we do. But the message is, for all of you that don't have some big ticket items, and I qualify that by saying something that's $600 or more. And we're looking at $6,000 here. When you got these big ticket items, know right now that you're going to need to be prepared for serious negotiations. And like we talked about last week, your negotiations, you can go ahead and forecast how they will go and take risk management tools to protect yourself and also to give you a better chance to end up winning the deal. And winning the deal is so important. We'll talk about that later in the program tonight. But just know that we don't need to make some changes in order to keep the competition from eating our pie right off of our website. Number one, I don't recommend to you today that she changes her prices from $2,700 to $2,695. And I don't recommend she change that $5,500 to $5,495. Why? Because people like those numbers that come just under another plateau. If you've got $5,500 to spend in your budget and 4 people are offering you a budget for $5,500 and one's offering you one for $5,495, excuse me, that $5,495 will get serious consideration. It will. You might not get the deal, but you'll get serious consideration. The same way with the $2,695. And, you know, kind of, sort of, no, it ain't kind of, sort of. This is take it or leave it. And I don't like that. I don't particularly like a take it or leave it ad because this looks like even at $5,495, that's take it or leave it, and $2,695, that's take it or leave it. So what do we need to say up here that takes to take it or leave it away? And just a couple of words: pricing starting at. Pricing started at. Okay? And that's the hook. Pricing started at. And then you might mention that if you want to pay in advance for a discount, we can talk about that. And also, if you can't stand all this money now, we might be able to work out a monthly payment plan. So get away from take it or leave it just by using some statements like that. Give that some thought. Now, I suggest to Janae that we do not tell about everything we've got to offer. And there's a lot of room between $2,700 and $5,500. I would suggest that we have a menu block that people would check off different things that they want when they send in their initial request for a quotation or you're doing a worksheet on them. So they know the general range, but still you're going to ask them to give you a check off all the blocks that are important to them. And then you prepare a final quotation that gets right down to the bottom line without putting a money value on everything. But you tell them the services you don't provide, but you'll group it at the bottom into a bottom line. And the bottom line is all inclusive. We are here for you to have 100% satisfaction, to be able to relax. And that way someone might start out with the $2,700 range plan and start adding some other things onto it. That's okay. Why? Because they are having something to do with what the price is going to be. Instead of it being take it or leave it, is let's work together and get a price within your budget. That will help you hold on to that customer. Also, you might definitely say that how much money you're going to need up front, how much money you're going to need in the middle of the plan, at what point do you need the balance of your money. Definitely before the date you want to get paid in full. And also you want to say in very clear terms that there's not going to be any refunds and all payments are non-refundable. If that's the way the business works. I would think that it would, but now I need to say, I've never been in the wedding planning business. What I did with my girls is I gave them a budget to work with, and then I just tried to forget about it. I just knew that money was gone and figured they'd probably come back for some more. But you know what? They didn't. They worked within the budget, and everything worked out just fine. Everybody was happy. So I'm saying here, this is a disclaimer. I'm not in a professional position to tell Janae the fine points on wedding planning and pricing, because I hadn't done that before. I'm just talking in general business terms with these comments. But I do know that if you're in a position to offer a cash discount and someone's got a $5,500 budget and all their stuff comes up to $5,900 and you're only asking for $400 more, but let me tell you, with young couples, if the mom and pops or they saved up $5,400, that's all they got to spend, and that's going to be it. Now that you know that, because up front you got that information from them. What's your budget? I need to know what's your budget. What are you working with? And then you would be able to put together, as you're planning your presentation, being very well prepared, you would make sure that it added up to $5,900, $6,000, well over their budget. And then as they get into the negotiation, and then as a closing tool, the secret weapon, you would notice you've got a cash discount in the bottom that you can pull out at the close and say, well, we can go ahead and do business here now. Well, I can do a business with you for $52.68 if you're ready to close the deal. And if the folks like you and you've got their trust and confidence and their budget's $5,400 and you're off into, let's nail it down right now for $52.68, I'll be surprised if they don't write you a check, because that's the deal. You get the cash discount if you go ahead and pay up front. And of course, that's going to bring on some negotiating. Hey, we don't feel like paying up front for something that's going to be several months away. And then who knows what might happen. I'll have to change the date or something. Well, again, that's where, as a professional wedding planner, there'll be some fine points there that you'll have to deal with that I'm unfamiliar with. But the secret weapon is not to tell everything you're going to give on the website. It's to hold back so that you'll have some things to agree to work with value-added items like we talked about last week. Don't put it all out there. What you want the message to be is 100% satisfaction. You'll do all you can to help them achieve that, and we'll work through the details after we get into building our plan. Let's talk about those skills. You've heard about this now for 7 weeks, and it's still very important. So if you haven't memorized or read or looked at all of them, hold on to your skill sheet. Go back and check them out. If you only do one a day or one a week, the more of these drill skills that you can master and call your own, the better off you're going to be. They help people every day, and I get those messages. Okay, the nitty-gritty tonight are going to be record keeping, depreciation, taxes basics, and selling secrets. Secrets to help you close sales. So part one is, let's talk about record keeping. You have probably already realized that as you get into getting your business started, there's going to be all kinds of paperwork. You know, those folks that said the computers are going to make the paperwork go away, well, they weren't not quite right, correct? So let's just know right now that you're going to need to be able to save records. So I suggest you go ahead and get a 4-drawer filing cabinet. Maybe you can find a used one. They're not that expensive. In reality, you're going to need 2 of them probably. And just go ahead and get set up, get your file system set up so you can start keeping up with all the stuff you need to keep up with. Have it in a certain place so that it don't get missing or people don't mess with it. But in individual records, especially those now that we're dealing with on the computer, there's all kinds of ways to save your records with flash drives and offline software that does it, the cloud, a lot of things. Have a system that you can save your records where they'll be safe and you don't have to worry about them being blown away, and you have them backed up. So that's number one. You folks that are on with us now, you understand that, and I'm sure I don't need to say a lot about it. Your records, though, some you will need to keep permanently, and a lot of these are in paper. Now, of course, you can copy them, make PDF files, and turn them into computer files if you like, and that's a good idea. But the originals you really want to keep as well. Articles of incorporation, audit reports from accountants, copyrights, patents, deeds, titles, stock bonds and registers. Some things are very, very important, and you need to keep the original again. And then there's those items that your accountant will be sending to you: year-end trial balances, financial statements, tax returns, registration documents, and things like that. Keep them forever and ever and ever. Some stuff we need to keep for 7 or 8 years, and the rest of it you can toss. You don't need to worry about it. But the items that you do need to keep for 7 or 8 years, and I'll qualify that, the law is 7, but I'm suggesting 8. I'm suggesting 8 because every year after you box up your stuff, 3 or 4, 5 or 6 different documents that come in late or tardy, or you find it where it was misplaced, you don't want to throw it away because you know it's a tax document. So most of us will just stick it right in this current year's tax file and say, well, if I need it, I know where to find it. That's okay. So I keep my records 8 years. But in the things that we do need to keep are your different accounts and accounts receivable ledgers, bank statement, bills of lading, cash record blocks, books, contracts and leases, employee records after termination. So let's talk about a couple of these. Bill of lading is a shipping document. So if you're doing invoices and you're shipping documents from here to there, especially out of state, it's a good idea to keep those shipping documents and actually go back and staple them to the invoice where it was billed out. Especially if it's going to an out-of-state customer that you didn't have to charge sales tax, North Carolina sales tax, because they were out of state. So if the state auditor says, well, show me proof that this went out of state, then you'll have a shipping document to do it. Because if you don't, then you're going to have to ante up the tax probably, okay? And that could get expensive. Employee records, years after an employee leaves you, they are apt to have an injury or get hurt or end up in an emergency room. And the first form that's put in front of you at the doctor's office or the emergency room is this accident or is this situation related to a work-related issue? And people will check yes if they think there's any way it is, and then they'll say, well, who were you working for when this happened? And even if it's, say, a back injury that started 10 years ago when you were working with someone else like me, they'll check that, put my name on it, and I hadn't seen them in 10 years. But I'll see them in a week or two because I'll get a bill from the Employment Security Commission where they want to take money out of my Employment Commission, Security Commission account to pay their doctor bill. But if I've got a record when they signed out that they were not sick, had not been injured, and I usually with employees when they're terminating this have them sign that so I have it in the file, then I don't have a good leg to stand on so that they're not going to be able to get that money out of my deal. It probably was not, well, I don't know what caused it, but they weren't hurt on my watch. See, when you own a company and you have employees, you pay unemployment insurance. The employee doesn't pay it, but you do. You pay a percentage every week or every month when they get a check. And that money goes into an account in Raleigh, and it's listed in your name as the employer. And it builds up over time. And when someone gets hurt that works for you, they charge that particular account to help pay those bills if they're workman's comp bills. When I closed my business formally in as far as employees go, back in 2008, I had $30,200 and some dollars in that account. That's a lot of money. And I have been just thinking about it for years that whenever I sell my business, I don't get that money. It's going to be my money because I'm not going to have any more employees. Well, let me tell you, when I wrote them and asked them to send me the money, a lady called me up and said, Mr. Carver, we really appreciate your letter, and we really appreciate what a great employer that you have been and able to stack up $30,000, which shows that your employees have worked safe and you hadn't had many injuries, if any, for many, many years. So congratulations on accumulating an account with over $30,000. I mean, just really nice, and I was feeling good. And then she said, but I need to tell you, that's not your money, that's our money. It was in your name. It was held in an account for you, for your employees, but we're going to keep it right there. And if some of your employees have trouble in the future, we're going to charge that account if they were hurt on the job. You won't ever get that money back. Well, that was a sad day for me. I'll tell you that. I was going to use that money to buy a new boat, but hey, the boat didn't float, so that's the way it goes. So just know that when you have employees, you'll be paying unemployment, workman's comp premiums every week, and you're not going to get that money back, but you don't have to pay it. And if you have someone that has a lot of injuries and they deplete that account, then you know what they're going to do? They're going to start charging you more each week. You'll be a higher risk, so you'll pay more into it. So it's important to protect your money, save those old records, because that'll be your salvation. You also want to keep your sales tax returns and all your invoices, payroll records, canceled checks, a lot of stuff, a lot of paper. So just go ahead and get the filing cabinets right away and just know that it's coming. So now, after 7 years, you can throw those papers away, but here's a word of caution. Don't just go over to that box or that big envelope and toss it. No, you open it up first and look through it, and if there's any documents in there and there may be that need to be kept permanently, or you just don't feel good about throwing this away for whatever reason, then before you throw everything away, you get out what you're concerned about, put it in a keep permanently file drawer, and then you'll have it when you need it. So just don't throw the whole box away because it's 8 years old or 7 years old. You want to keep your records safe and dry. You want to keep them where they're not in a building where probably not going to burn down or blow over or get flooded, because at some point in time, you'll have an audit and you'll need those records, or at some point in time, because we live in an area that has hurricanes and floods and tornadoes, FEMA, U.S. government FEMA, may come through and offer you some low interest loans, or maybe even a grant if your business has been destroyed. And when they do, they're going to want to see some records, because they'll base how much you're eligible for on how much business you've been doing in the past. And the only way you can prove that is to pull these old records out. Of course, in the same situation, if we have a disaster, the insurance people are definitely going to want to go back to those records so they can see how much your company was worth, or what your type of assets you had that may have been damaged or lost. And that paperwork is the way you're going to prove how much they owe you. So it's important to keep your records. Now let's talk about depreciation, which is not known much about unless you've been in business for a while, so we don't talk about it. Appreciation means something's going up in value. Appreciation. Depreciation means something's coming down in value. And depreciation will have a major impact on your business at some point through the years, especially if you're buying assets or adding equipment or property or things like that. It's a difficult subject for a newcomer, and I've looked and tried to find a place that I could give you a good solid base of information, and did. On the internet, I found Lisa Borger's statements about depreciation and explanations. They're very good, so I copied it. It's one of your handouts. It will be very good reading to you and give you a better understanding of depreciation than I can give you just a few minutes online. So I sent that to you. So we'll let Lisa do the heavy lifting, and I'll give you the short session, okay? Depreciation is all about how anything with time and wear loses its value. And in business, when we buy something tangible, that something becomes an asset of the business for a certain dollar amount, that being what we pay for it. But the very first day after we buy something, it's going to start depreciating, in other words, going down in value, depending on how much wear and tear it's got in real life. But in the book life, on the books, it's going to go down in value based on the percentage of the number of years that we put it on the books at to be depreciated. So keep that in mind. We're going to be talking about items that we buy that are going to last a long time. We're going to be concerned about what we pay for them and when we bought it. And then each year we're going to watch the depreciation take their value down. And as that value goes down a little bit each year, our company net worth will go down if that's the only thing we have. That's the first part of the lesson about things going down in value. But the good news is, as a matter of fact, the great news is, we can use depreciation. As those items go down in value, we can start taking deducts from our taxable income. So yes, amazing. When we buy something like that and we start depreciating it, that depreciation lowers the amount of tax that we have to pay each year. So that's why we need to keep up with it. There's another reason we need to keep up with it, and I'll dive into this deeper later, but everything related to county taxes now will come back to this depreciation conversation. Let's see how it would affect you tomorrow. You've started your new business, Sarita, and you have $10,000 in cash and deposited in your new company checking account. So as of today, your business is worth $10,000. That's easy enough, right? But it's time now for you to start doing something, getting ready to do some business. And in your business, you would probably need a $5,000 printer or some special engraving stuff or things related to the type of work you're going to be doing. But we're going to say that you're going to be doing some type of woodwork and you needed a saw that was worth $5,000. So you buy the $5,000 saw. First question to you, LaToya, is since Sarita had $10,000 and spent half of it, $5,000, does that mean that her business value went down 50% or dropped $5,000? Well, I'll give you the answer is no. Because not only does she still have the $5,000 cash in the bank, but she's also now got a $5,000 saw that she just bought and it's brand new. So as of today, she still has a company that's worth $10,000. We'll add the two together, you're doing just fine. But now depreciation kicks in, because every day from now on, that saw is going to depreciate. Whether she uses it or not, on the books, it's going to depreciate because she's going to set it up on a 5-year depreciation plan. these laws change about how long you can depreciate things, and your bookkeeper, your accountant, and probably your accountant that have to tell you when it's time for you to ask, how long can I depreciate something? But some years it's been you can depreciate 100% on items, and different items, different categories. Some years 10 years depreciations, or 5, or anywhere in between. But we're going to use the 5-year because it's easy to use with a $5,000 saw. So we're going to say that Sarita's going to depreciate this over 5 years. So she'll put it on her books, and on her books means it goes into the depreciation sheet, which is her list of assets. So she'll put it on that she bought this particular saw on a certain day. The serial number is this, and she paid this amount of money for it, and might even put an invoice number beside of it to prove when, where, and how much she paid for it. It goes on the books at $5,000. That's what you paid for it. But next year, a $1,000 value will come off because you're depreciating it over 5 years. A $1,000 value will come off. So next year, the book value will be $4,000. The next year, $3,000, $2,000, and the 5th year, $1,000, and the 6th year, $0. Okay, that's how the book values work on a 5-year plan. So every year, that particular saw is coming down. Now, you might have a lot of different items on that depreciation list, starting at different times in different places and different amounts coming off, but they're all going to start reducing in value. Now, the good news is that we're going to do a write-off, and a write-off is a deduction. And we're going to be using these deductions, which is in the depreciation columns down. That's the type of deduction it is. That over the 5-year period, every year, we're going to take a $1,000 deduction on that saw, and that number is going to reduce our taxable income by $1,000 each year for the next 5 years. So yes, I spent $5,000 today, but over the next 5 years, I'm going to save taxes each year based on my purchase now. So the word is you need to be real careful and not get caught into the jam of someone telling you, hey, you're having a great year, go out and buy a bunch of stuff because you can use depreciation so you don't have to pay taxes. In other words, I don't spend a lot of money, so I'll save a lot of money on my taxes. That could be the case if you got some 100% write-offs and things like that, but most of the time you don't. And most of the time, yeah, you go out and you spend a bunch of money, but you're only going to be able to lower your taxable income by a percentage of that each year. And that's taxable income tax value is still going to apply on what's left. So it's not a dollar for dollar situation. So the word of caution is do not take somebody's advice that tells you to go spend a bunch of money to save tax money. You discuss that with your accountant because this will change under different situations in your situation and the year that you're dealing with. So it really helps a lot of folks. But as new entrepreneurs, very seldom, because you don't have to be showing that you're making a lot of money to be able to save a lot of money. A good example is even a small farm operation now that's might be showing that they're used to selling crops and chickens and hogs and things. You might be selling $20 million worth of stuff, and you might end up having a taxable income of $5 or $6 million, and that's big money. But let me tell you, when you go buy a combine or a tractor or an irrigation system, you don't spend hundreds of thousands of dollars, and then that type of write-offs can make a big difference for you. But we need to buy stuff, and we need to keep up with it. We need to start accumulating assets so that our company shows some value and some wealth. So just play it easy, but depreciation is a good thing, and especially for new businesses, because you can show that I made money, but I spent it and ended up not having to pay many taxes, but I did have to, was able to take a lot of depreciation, and a lender will look at that depreciation and consider it a positive a positive, because that shows that you were making enough money to buy something. And at the end of the year, you still didn't have a loss. So that's not a bad deal when you're first getting started. Two kinds of expenses we're going to need to talk about. Two kinds of deductions: regular business deductions, and capital expenses. Now, the saw that Sarita bought was a capital expense. It'll last a long time. It's tangible. We can see it. We can put our finger on it. Okay, but the saw blades that we bought for it, we used those up and threw them away. So the saw as a whole is a capital expense. That means we're going to use depreciation on it. But the saws and other throwaway items that we'll buy for it will be just general write-offs. How does that affect our taxes? Let's talk about that. Every time during the past 12 years when I asked an accountant, a CPA, tell me what is the most important thing for me to recommend to new entrepreneurs, almost every one of them will immediately say the same thing, like they knew the question was coming. They will say to encourage you guys to learn how to pigeonhole tax money. Put your tax money aside so you'll be able to pay the bill when it's due. It is so easy to have a good year and you're selling a lot of stuff and you're bringing in a lot of sales tax or other kind of tax, and you're so excited about paying your bills here and paying them there and taking advantage, and you got a lot of money in the bank account. And so you might buy some things that you normally want or spend it on some other items. And now it comes up on a certain day and you're being told, you get a bill, hey, you need to pay several $1,000s of tax today. And you look at your bank account and it is not there. Then you're in trouble, because you've got two choices. Either pay it or don't pay it. And if you don't pay it, that is not a good choice, because when you're late paying your taxes, you'll have to pay penalties and interest. And if you don't pay them, they may close you down and take your assets and sell them off to pay the taxes. They have no sense of humor whatsoever. They're nice folks when you're getting started, but when you don't pay the taxes, you don't get in trouble. So what's the alternative? As you make sales and you start collecting money, put that money in the bank, but right then see how much your tax obligation is going to be on it and set that money aside. So that every day in your accounting, like in the bookkeeping, like we talked about last week, you know how much tax money you got over on the side, and you better keep that in the bank account. And then you don't come along and you don't need to write a big check for something, an opportunity comes along, and you get ready to write it, and you see, if I write this check, I'm going to use up some of that tax money. Don't write it. You figure out how to get that money for what you need some other way, with a credit line or otherwise, but you keep your tax money pigeonholed so you can pay it on time, and you'll have happy days with the tax people. Now, those business expenses, general items, were things like rent, travel, payroll, things that are here today and gone tomorrow, and you got nothing to show for it. Assets are tangible. They're here today, and you got something to show for them. That's the difference in a business expense and a capital expense. Capital expenses are usually larger ticket items, things with serial numbers that you can put your finger on, put it on a shelf, a rolling stock. And there's a lot of consideration for capital expenses. Maybe you borrowed money on it and you were paying interest, and that interest could be part of your write-off. Depreciation or depletion get kind of complicated with some big ticket items like real estate, but buying issues, capital items issues, are going to be deducted, depreciated, and add up to some nice deductions for you. So just keep that in mind. Let's say you're buying rental equipment. Let's say you don't get in the rental business and you're buying rental equipment. Well, that's not to depreciate, but the loans on that rental equipment that you're purchasing, you're going to be paying interest and payments on those, so they're going to come into the play. It's kind of complicated with your bookkeeper, so that's why you need one you can trust and get along with. But that can get to be a very important part of the profitability of your business. So let's dive a little deeper into this. Now, right here beside me is a Hewlett-Packard printer for about 250 bucks. I bought that about 4 years ago, and it's clicking right along just fine. And I have to capitalize that. I put that in my books, and I'm calling it an asset because I'm proud of it. And it's just a little $250, but it's right there on my inventory. But if I was a big insurance company and I had auditors and adjusters out all over the country, 2,000 of them, and every one of them had a $250 printer, and they were always replacing them, then no way would I ever capitalize that. I consider it a throwaway, a general write-off, and never include it in my capital expenses because I've got so many of them, and I'll be a big company. But when I buy a $2,500 big commercial printer or $5,000 printer, I'm definitely going to write that serial number down and capitalize it and use it for depreciation. And a big company probably would as well. So the message here is that every company, yours, mine, hers, everybody's going to handle this issue a little bit differently depending on what suits their needs best. So even though I'm going to be talking about a lot of stuff that may or may not be capitalized, that depends altogether on how large your company is and what your goals are on your bookwork. This is a very exacting example on tax avoidance. Tax avoidance means arranging your bookwork and your paperwork in such a way to help you avoid paying taxes. And one of the places that you would use and think about tax avoidance is whether or not you're putting something into your depreciation system with your company. How about a big old box of paper? It costs $250, same as the printer. What would I do with that? Well, it's a general write-off because that paper is going to be printed, thrown away, and it's going to be gone in a year, okay? So it's a throwaway item. How about a set of tires that cost $2,000? Well, in my business, that $2,000 set of tires probably lasts me 5 or 6 years, and I would depreciate it. But a big trucking company, bus company, they would not. They'd write it off. Same way with an engine. But in my business, a small business, $17,000 would go on my books. Some companies would not. How about let's renting some stuff? You rent a forklift or rent a car, all rent. If it's got rent on it, it's never going to be capitalized. It will always be a write-off business expense. Payroll, write-off, never capitalized. Professional fees like CPAs, lawyers, other folks, general write-off. How about a new set of tools for $4,000? The tools last a long time, so let's depreciate those. Let's call them a capital expense. But the rest of the story is very seldom will any of us buy a $4,000 set of tools at one time. But $400 or $500 this month, $100 next month, $30 the next month, $500 the next. Tools are usually accumulated over a year's period. So if you know that you're going to be doing this year after year, as you buy those tools, keep those receipts separated so that at the end of the year, you can sum up all these tools that you bought, come up with a total, and then enter that total as a set of tools documented with all the receipts that you have. That way you can get them on your books, call them an asset, keep up with it. Now, I'm renting a forklift for $1,000 a month. To be sure, I can appreciate that. No, rent. No, it's gone. It's just gone. Write off. How about the delivery cost for the forklift or anything else I get delivered? No, it's non-tangible, so it's a write-off. But now I have rented this forklift for 24 months at $1,000 a month. I got $24,000 in that forklift. No, you don't. No, you got $24,000 in the use of that forklift, which was just fine. And I recommend people renting like that if indeed it's paying its own way and making you money. There again is a great example of avoidance. You really don't want to, maybe in your business, you really didn't want to own that forklift. You just wanted to use it, and that was a good value for it. So yeah, you went ahead and rented it. One, because you were able to enjoy the use of it. You didn't have any maintenance on it. Somebody came and fixed it for you when it was broke down. Didn't cost you a penny. Plus, it was 100% write-off, a general operating expense, so it definitely helped lower your tax obligation. So, yeah, that was a good deal to avoid some taxes. But now, after 24 months, you got it on a rent-to-own plan. You've got the option to buy that $24,000 forklift for $5,000. You can purchase it now for only $5,000. Yeah, I'm going to do that. I'm going to write that check. So, is that $24,000 forklift going to go on your books as a $24,000 item? No, it's going to go on your books as a $5,000 item because that's all you paid for it, and then you can depreciate it from there. But it is going at $5,000. So let's stop and gander at that a minute. The forklift is yours now, and its fair market value is probably $20,000 to $24,000. But the book value on your company's books is only $5,000. And this will happen with lots and lots of assets. Yeah, so the word is be really careful and do not confuse book value of a company with fair market value of a company, because the range could be tremendous. Both numbers are important, and both numbers have the company name in it and have the word value there, but one says book value, which is a whole different set of rules, and one says fair market, as we've talked about before. That's a whole different set of rules. Just imagining you could have a company that had a fair market value for the whole company and its assets and what it can do for folks, a selling price, so to speak, for $20 million. And you might look at the book value on it, and it might be $4 million. Or it could be opposite numbers. Things can get really weird with those two sets of numbers, so just be careful and know there's a significant amount of difference there. General tax issues. You want to try to have a good experienced bookkeeper if you can when you get out shopping for one. Someone that's familiar with your type of business and knows how to set up the chart of accounts and such as that. So if you can find someone with experience in your type of books, that's an asset. You also want to find a CPA that has familiarity with what you're doing and can look over the bookkeeper's work and make it happen too. I suggest you don't use the same two people, especially as your company grows and matures. Maybe to begin with, when you got a real simple and not very expensive tax preparation charge, maybe it'd be all right. But I really like to see the bookkeeper be at a different place than the CPA office. I want them to be able to talk to each other, but not to be great friends and looking over each other's shoulders all the time. I do want the CPA to look over the bookkeeper's shoulder when it's time and let me know what kind of work they're doing, okay? There's an article at the IRS website. I've given you the link to it. It talks more about this issue. So I'm again going to approach avoidance and evasion. Very few people giving webinars and seminars would even use these two words, but I want you to know it's important, especially for a young upstart entrepreneur company. Avoidance is necessary. It is a good thing. It is a business skill, one that can be enhanced to save you a lot of money and strengthen your company. Evasion is not. Evasion you want to stay away from because avoidance is legal. That's why we have accountants and bookkeepers to help us figure out how to run our business and save all the money we can to end up with some profit at the end of the day so we can stay in business. But evasion is against the law. You're cheating, you're lying, you're hiding, you're misrepresenting. So therefore you can indeed expect to get in trouble if you're involved in tax evasion. So just know that that's a fact, but still avoidance, I do want you to get good at it. Hot buttons. What are the items that folks like you are always quizzing me about when you're getting started? And that's the deductions. What can I use as a tax deduction, Steve? Well, number one, part of your handouts that are going to be emailed to you include 25 deductions that all business entrepreneurs ought to be aware of. And it's pretty clearly stated in the study guide. I'm not going to take all the time that guide gives you that information, because I want to talk about some things specifically. Your home office deduction, and I guess most of you on with me now will be working out of your home office just as I do. Can you save some money because of that? You can. And here's the way generally that works. If your office is inside your home, you need to measure the space that your office is taking up inside your home and compare it to the total space of the square footage of your home. Example, let's say you've got an 1,100 square foot apartment, and your office space is 100 square feet, 10 by 10 space. Therefore, 10% of your apartment area is office. Accordingly, 10% of the expenses that you have related to maintaining and paying rent or buying or keeping clean or repairs, lawn service, utilities for your apartment, when you add up all those numbers, you multiply it by 10% and you take that figure and put it right over as a home office deduction. You don't need to keep those records so you can show how you came up with it. That's how it is. But it's mighty hard. A lot of people will say, well, look, I've got an 1,100 square foot apartment, but my living area is my office, and it's half of it. So that's 550 square feet. So I don't take 50% of all my expenses as an office deduction. Well, depending on the kind of mood and what kind of day the auditor's having, they may or may not buy that. So just know that you don't have to explain it one way or the other if you're ever in an audit. But if you kind of reach out for too much, it might come back to bite you a little bit. That generally is not going to get you in trouble. They will just make an adjustment and you'll go on from there. So it's not that big a deal with small companies like ours. Big companies, it could be huge. How can you avoid that even though? If possible, you want to have a outside separate building for your office. And if you do that, then you're able to rent, you as an individual are able to rent to your company that building. And that rent that's being paid, you see, will just cover it. So the company will pay you X amount of dollars per month. That is taxable income to you. But when they pay that, it's a deduction for the company. So it's a wash. I've been doing it for many years, 15, 20 years. I rent my home office here to my company for $625 a month. My company pays me a check every month. I have a contract, a lease agreement, and it worked out real well. Doing that gives you some flexibility about charging maintenance bills and things like that that may be going around your homestead there, charging them to your office expenses to help you pay for some items with a company check that maybe before you were having to pay with a personal check. You just need to document it, make sure everything's on the square. Meals, entertainment, travel, and gifts. Man, 25 years ago, we had a lot of flexibility on that. You could almost write down whatever you wanted to and call it a deduction. That's not the case anymore. Everything now pretty much has to be documented. And then your travel expense for your car and entertainment and all need to be documented. So as you're traveling, doing business, you need to keep a log, what your expenses are, where you are, who you're talking to, and then at the end of each month, tally that up, total it up, and let the company write you a check to reimburse you out-of-pocket expenses. Okay? Now, do you want to own your vehicle, or does the company need to own the vehicle? That's a question I get lots of times, and that is, here's the facts. Usually, you're a lot better off to own your own car or truck in your name, and you pay the insurance, you pay the gas, you do this, you make all the payments on the car. And then you keep up with the mileage. And you'll get reimbursed, I think it's something like 57 cents or close to that, somewhere in the 57 cent per mile range for every mile you travel. So for every mile you travel, let's say you travel 100 miles, that means the company is going to pay you back $59. So generally, you can make the payments on a nice late model used car if you're going out and buying it. Make the payments on that and the insurance and such as that with that 50 some cent per mile reimbursement. The company will write it off. You will take it, but you don't have to call that taxable income. It's pretty good flick there. In most situations, your accountant you have a particular issue that may change. So keep that in mind. If, however, you need specialized equipment, like a special type of truck, or you need a lot of vehicles, once you move into that range where the expenses are going up above what they normally are for an individual, it might be better for the company to own those vehicles and just let the company pay all those expenses. Indeed, they're going to be able to write it all off, but the insurance on them probably will be less. But now, if you're using one of those vehicles for your own use, then you're going to have to pay the company to use it. Like when you owned it, the company paid you. Now that the company owns it, you're going to have to pay the company a mileage fee for every mile that you drive the company vehicle. And that needs to be kept up in a log as well. Interest payments, that's a write-off, no questions asked. All types of rentals, taxes that are paid, those are write-offs. Insurances are write-offs. Business training and uniforms or clothing that you buy for your business, that is a write-off as well. But I want to talk about insurance just a minute because that's so important to a lot of people. Maybe going into business, you're incurring a lot of debt that you wouldn't have had otherwise, and you're concerned about that. Maybe at the stage of life that you're in, you've got dependents that are depending on you, and you want to have life insurance for them in case you pass away. So here's the thing. If the company is the 100% beneficiary, or sometimes only 51% beneficiary, then you can have life insurance policies on yourself, and the company can pay the premiums on them, and you don't have to pay the premium. Pretty good deal there. Sometimes, and this is changing, so I have to refer back to you need to talk to your insurance person or your CPA. Sometimes the company doesn't have to be but 51% beneficiary, and you can be, someone else can be 49% beneficiary, and still the company pays the whole bill. That's very nice. Now, if you're buying life insurance, whole life insurance policies, you're going to be creating cash values every month as you make those premiums. Sometimes that percentage can be a pretty high amount depending on the different policies you look at. But what it is doing is letting you know, that you're enjoying the benefit of having life benefits, but the company is paying the premium, and you're building cash value, which is almost like a savings account. So you need to keep that in mind, because someday that life insurance policy might have a really good cash value that you could cash in for certain issues or emergencies or educational things, or maybe even retirement. So just something to think about. And in long-term planning, talk seriously with your insurance agency about that. Okay? I see I'm getting some Latoya and Sabrina. I don't know if y'all talking to each other or me, but at any rate, I'm not going to be able to stop to read all that now, but I'll check it out later, okay? Or at the end of the program, any questions you have, we'll discuss it. So yes, I'm glad to see you using the chat. Tax preparations and collectors of tax. Little tip, you're just getting started now. Maybe you hadn't filed a business tax return or worked with an accountant or a bookkeeper. But when you carry your end of year tax information to your accountant, don't just put all your little paperwork in a brown sack and carry it in there and have them sort it all out. And you'd be amazed at how many people do exactly that. I'm going to encourage you as an associate of the Academy to stack these things up in different categories And then you add up the summaries of your fuel costs, your utilities, your this kind of expense, your that kind of expense. You do all the separating out and summarizing, and so that you're carrying basically just one sheet of paper with these type of information to your accountant instead of 150 types of sheets of paper. If they need additional information when they look at your summaries, they ask for it. But why do you want to do this? An accountant will be accountable for everything you hand them, and they will look at each piece of paper, make a note on it what it was, and each one of those notes in that time will generate a bigger bill for you. So all of this type of work that you can do for yourself will save you money in the long time, and that will really, really help you. Who's going to end up with your money? Who ends up with my money? Taxes, permits, license, estimates, fees. I don't call them all taxes. Those that go to your city government, they usually end up at the town clerk's office. The county taxes over at your county seat with the collector. In today's world, the county collects a lot of the city taxes. North Carolina's like taxes, North Carolina DOR, Department of Revenue. Federal money, IRS, U.S. Treasury. So the good news is that the county and the city and especially the state are really nice to entrepreneurs usually. You can talk with a human being and they'll remember your name. You can call them, make an appointment, sit down eye to eye if you want to and work through things, especially North Carolina. They have actually a regional offices, so you don't always have to go to Raleigh depending on where you're located. And very helpful again. The state DOR is very, very well connected with the small business centers. And usually your small business center director knows someone in DOR personally, and they make a call on your behalf. But another piece of information is this fall in November and December, the Department of Revenue are sponsoring with the small business centers a series of webinars that will be starting in just a week or two. And I will email you a list of that summary, and they talk about individual items in a webinar. And I understand these will be quite helpful, okay? U.S. government, IRS. It's hard to get to a human being on the telephone. Usually you're leaving a message or sending a text, or they send you to a website where you can fill out a form. So it's maybe the best they can do, but it's not easy. And it's hard to talk to the federal government about our little issues back here in North Carolina in our small company. So what I suggest is let your CPA do the conversations on your behalf with the federal government. They know who to call and how to phrase things, and they'll understand when they get back a message, well, this is related to code so-and-so or form this or chapter 5. I mean, they're not talking legalese type language. That's what they do. And it'd be very difficult for us to understand them as startup entrepreneurs. Your accountant will be able to ask the questions for you and get the answers for you without ever mentioning your name to the IRS. And that's a nice, safe feeling to have as well. That's what they do. Also, if you're working with an accountant and you have an audit, oftentimes they will sit right with you during the audit, or sometimes represent you where you don't even have to be there yourself. So when it comes to the IRS, in my mind, the next thing that comes to my mind is to call my accountant. Okay? Just words to the wise. Now, in your handout, as on the screen here, I've given you information on how you can get in touch with the state and federal and other folks. Generally, the county and city folks are easy to get up with. You just go to their websites online, and they'll have their phone numbers and email addresses. You can contact them there. The different types of taxes. Withholding, privilege license, unemployment insurance, and franchise kind of are the main ones that we kind of need to talk about. Others like sales tax and maybe some other things, they're going to come along their own way. But withholding tax are those taxes that you have to withhold from employees. In other words, you take employees' money and promise to send that money to the state each week or month, along with the contribution you're supposed to make, insurances and things like that. Privilege license are the monies that we pay to the local town governments or city governments for the privilege of doing business in their domain. Usually they're very small and not very complicated. We talked about this back in week 1 and 2. $50 to $100 sometimes for small businesses, sometimes free, but you still have to register. Unemployment insurance, again, that's a tax that we have to take out of the employees' pay, plus we add some of our own to go along with it. So when you're hiring employees, you're going to pay them the salary that you agreed on, but also there's going to be an additional charge, generally 12 to 20% more, that you're going to have to kick into that salary out of your pocket to keep that employee and pay their benefits and insurances. So keep that in mind. The cost of hiring a person is just not what you pay them salary or payroll-wise. There's a lot of other costs that have to be added up by the business owner. Franchise tax. Well, I know that you're not buying a Chick-fil-A or a McDonald's, but you're going to pay a franchise tax just like I have every year. At the bottom of the form on the state tax filing return and on the federal filing return, there's a little line that says franchise tax. And federals, I think I have to pay $200. State, I think I have to pay $100. But what that is, whether I make any money or not, they're going to collect that tax, and I just call it a franchise tax, is money that we pay the agency to handle our paperwork. So they're going to get a fee. They're going to get a little bit of money from you, whether you pay taxes, additional taxes or not. So don't let that word franchise make you think you're better off than you are. What that is just another bill to pay to the government. County taxes are kind of strange. All the federal and state taxes are going to be based on your income, your profit. That's right, profitability. Income taxes, not sales, but income taxes are based on your profitability. But county taxes, not at all. I said in the first series when we first got started, your county taxes are based on the information that you'll find on your financial statement depreciation list, or your depreciation list of assets. The county's going to tax you a certain value on what you own. The business vehicles, inventory, not inventory for sale, but other inventories, tools, real estate, equipment that you own or that you're leasing or renting, and other items like that that are tangible, okay, that you can touch it and you own it, and they can come and count, or you can come and count, and you're going to put the values on those. How do you know the values to put on them? As we said earlier, as you were buying items, you were deciding whether to use it as a business write-off or whether you're going to use it as an asset. So those assets that you put on your books and you're starting to depreciate, you'll go back to that list to see what the values were when you bought them, and then you'll see what the values are now, where they'll start to coming down. So those items that you put on that county tax listing on those assets, they'll be coming down. Now, this isn't to say that those items that you bought that are hard assets, but you decided to write them all off that first year and never put them on your depreciation list. Well, you still own those, and there's another place that you can put other there where you might list those down. So some people, that might be an exception and an important one, because the items that you want to claim as assets will indeed all add up and become your book value of your company. And the book value of your company is considered by accountants and all what it's worth. what it's worth is book value. But I will come back to you again and say that has nothing to do with what it might sell for, because that will be fair market value. When you're listing your county taxes, they will send you a form in December. And that form will say that you need to complete the listing. That means fill it out and send it back to county government by January 1st. And if you don't get it back in time, then you're going to be subject to a penalty, 10% usually. Well, you can't fill that out because you don't have your accountant's paperwork back that's giving you your first depreciation list until your tax returns come back to you to be sent in. So file for an extension. And to do that, you just go to each county. Each county has a website for their tax department, a place to click. And when you click on the tax department, there'll be another link that you can click on for business tax delay extension form. Every county's got it. You click on that, put your name on there, send it in. They will send you right back authorization to not to file list those taxes until I usually ask for April 15th. That way, when you get your report back from your CPA or your accountant that's helping you with your taxes, you can fill that form in and send it on in. If you don't do that, if you don't get the extension and you're late filing, you're going to get a 10% penalty for late filing. Okay. Let's try to stay off of the auditor's radar screen, and we can do that usually because usually only about less than 1% of all returns are audited anyway, and it's a great big world, so there's no way they're going to find me or you. But they do have a system of random choices, and they just pull some folks out at random whether there's any flags or not. So you've always got that issue that it may come up. But I will tell you that if you're doing some things and putting flags out, then your chances are better that you will come up and be eligible for an audit. So let's talk about some things that might help you avoid the audit. One is not to do business with shady preparers. Folks that blow through and put a sign up in the yard and say, I'll guarantee you a large tax refund if you let us do your books, either personal or business. I'll guarantee you a good tax refund. They can't do that legally, but what they will do, they'll take your information and they'll cook it, change the numbers around to make sure you're getting back a good chunk of money, and they're going to get a piece of that big chunk of money, and you're going to sign off on it because it's all in the fine print. And when the check comes, you're going to get a nice check, and they're going to have a nice check too. Well, it's just a matter of time. It might be 1 year, it might be 5 years, but when that comes up, you're going to be sitting in front of an auditor, and they're going to say, well, where's my money? I mean, you did a fraudulent claim here. Are you ready to pay it up? You can blame it on them all you want to, but it's your signature there. Well, you're here, and that preparer is somewhere down in another country or out of state with a different name. They're footloose and fancy free, and you're dragging a chain. So stay away from those type of people. I saw last night on TV someone saying, oh, I was in debt with the IRS for $20,000, and I had to go to ultimate tax people to get me off the hook, and such as that. I was in such bad shape. You see it all the time. I have to think in my mind, and I'm guessing, I don't know, but those are the people that are dealing with these shady tax preparers and trying to avoid or evade all the tax payments they can, and it has come back home to home. So you're not going to outsmart these people. So stay away from shady preparers. Make sure the people you're doing business with has a good reputation that you can verify. The nature of your business may make you eligible for a lot of income, cash money that you don't have to report, you think. Well, in every business, the IRS and the North Carolina Department of Revenues have seen every types of business you can dream of, and they know about how much money that you're making, depending on how much business you're doing. They got good estimates, and if your returns are reflecting different, they've got their signals and their computers that will raise a flag that, hey, it looks like this person is not reporting all their income. So just be careful with that, because they have ways of checking you and finding you. Not filing on time. Well, I've just given you 2 or 3 examples why you might want to get an extension. And indeed, if your accountant or your bookkeeper is filing the extensions for you and there's a good, just reason, and most of the time businesses do this all the time, but after that first extension goes and then you ask for another one and another one and another one, that's when it kind of gets people's attention and they start wondering what's going on. So just don't get too comfortable filing an extension after extension, especially the same year. All right, so that kind of wraps that part up. So congratulations on your first 7 weeks in the academy type work. I want to encourage you now to think about where you are and where you're headed. And let's talk about doing the business now. Are you going to stay away from take it or leave it presentations with your pricing? Please do. Remember to create the raving fan customer and follow up with them after every sale for 100% satisfaction and asking them what they're going to be needing next. Know that every new email address you can get needs to go into your database so you can send out your constant promotions to create more and steady business. How does your mobile web page look? When I find you on my telephone, is it good and powerful? Is it a sales tool? Have you got your Google My Business account up and running? Very important website to help you bring in some business. Have you spent time on your website to make sure that your pages are landing pages and encourage people to do business with you? Is the right sales tools on those landing pages? How about testimonials? And I really appreciate the testimonials that some of you have sent in. They're very valuable to us. Thank you so much. Because just like they're going to be the same for you. And when you're ready for me to write you a testimony, just let me know and I will be right there for you. Videos on every page, if you can do it. On every web page you're associated with, a video will put you in front of everybody else in the world that does not have a video. That is powerful. And they're so easy to make. They're so easy to make, just like we're making one here tonight. And I had this thought the other day that using freeconferencecall.com, you can get your own account. Don't cost you a penny. They don't charge you a penny per month if you're non-professional. And you can use that to really, they will record the videos right there for you. And then you can look at them, refine them, do what you want to do, turn them into YouTubes. So I just had this idea. We could have been doing this all along. In other words, we could even meet a one-on-one or with a group and everybody turn your video on and make recordings and then refine them as we go from there. Sabrina is with us tonight, and you certainly are a pro at making videos. I appreciate you sharing your video channels with us, and I look forward to spending more time there with you on that. How about that magic marketing moment? Do you remember that? That's when we have a chance to talk with a customer and ask them what they're going to be buying in the future, or if they know someone else is buying something, or can tell you a profit center you need to add. You're always enjoying that magic marketing moment with a customer. And it's up to you to initiate those conversations and then to make notes when they do get back to you on what needs to be done. But now we're going to move into a whole separate section. And it's not sales 101 or 202. It's not 303. We're going to talk about 404. And if I say things during this few minutes that concern you, that it's not that I'm stepping on your toe or being abrupt. It's just I feel an obligation to share these thoughts with you because I see so many people that think they're really good business people that lose deals every day and cannot close a deal or lose a customer because they don't know what we're getting ready to learn, and you're going to know it, and it's going to help you. So let's just start out thinking. We're all about cash flow to stay in business. And cash flow starts by closing deals, making sales. And as the business owner, always be closing has to be somewhere back here in our mind as a part of our DNA that's making our heart beat. We're thinking about cash flow, and we're thinking about how to close sales so we can create cash flow. So that's where we're at tonight. And it all starts with earning the trust of your customer, because people aren't going to do continuous long-term good business with people they don't trust. So I've had a chance to speak somewhat with the folks that are in class here tonight, and I don't think this is an issue with you, but you still have to show it to new folks and do that with your presentations. I was so impressed with the way LaToya put together your presentations for your website and for your social media. Every one of those is building trust. And I remember those words, we can help, we've got you. That's the kind of statements that will turn heads and bring people back to you. Really, really impressive. So now let's talk about some little things that I think will guarantee you failure. It's not okay for you to let your cell phone dictate what you're going to be doing in business. It's not okay for you to pretend to be a 14-year-old teenager that cannot get the cell phone out of your hand or out of your face. And I see so many grown adults, my age even, who can't function without a cell phone in their face. And when they're talking with a customer, it's right there. And they will indeed take calls, answer text messages like life or death depends on it. I'm going to suggest to you that you leave the cell phone in the car. Forget it. When you're with a customer, they need to be your 100% attention. Now, here's something that you find interesting. When you do that, and you've left your cell phone in the car and you're going out talking to a customer about an important deal, there's a real good chance the customer will have their cell phone in their hand and stop talking to you several times to answer a phone message or text somebody back, like life or death depended on them. And don't say anything. Just sit back and be wiser and just think about how it makes you feel, because if you were doing it, they'd feel the same way. Hey, you're taking away from our relationship in time. So don't let these cell phone fads now keep you from having a really strong relationship with a customer, because some people will be really turned off by it and will let you know by not giving you the deal. We're in an area in North Carolina, and maybe it's this way all over the country, but I hadn't experienced it anywhere else. We have in our environment, a lot of people think it's just perfectly okay for me to wear really strong cologne or smell good stuff because I like the smell of it. I put it on thick. But when you get in a closed space with someone, that other person may be really allergic to or hate the odor that you think is wonderful. And if you're a smoker, Lord have mercy, let me tell you, you're walking on thin ice, because most people today, even here in North Carolina, detest being tied up in a place where someone's smoking or they're having to smell the smoke on your clothes. And it's strong, and it makes a huge negative impact on that person. And wow, if you're into tobacco country down here in the Chitlin capital of Chitlin trails, and where people still chew and spit tobacco, and those folks come into offices wanting to try to sell you something with their spit cup in their hand and stuff dribbling down from their cheek, probably don't turn them off. Or maybe you want to bring your dog along with you. Everybody loves dogs. I love my Otis, but I don't need to bring him in someone else's office or into their yard or anywhere else. When you go do business, leave these things behind. Be your best person. Be prepared to give your best possible presentation and close the deal without having distractions. We talked about those earlier several times. Keep these things away, because with some folks, it'll kill the deal. Maybe the person that you're talking to you think is perfectly okay with it, and they've even indicated they are. But their boss may be walking by, or someone else that's not influenced their decision, who is like everyone else that detests these kind of things. And if they have a say-so in whether you get the deal or not, my friend, you won't. You know why? Because they don't want you to come back. They do not want you to come back. So we have to modify our behavior to be the best salespeople that we can be. Man, this is politics time, isn't it? And it's hard to find someone that is either all one way or all the other way. Very few of us are kind of in the middle. And those of us that are in the middle don't like the ones that are all the way the other way. So we don't need to debate that. But what I can tell you is, don't take a chance. Leave the politics out of your sales presentations. Leave the politics out of your informal relationship conversations with your customers. They may try to drag you into it. You just shake your head and listen. Never stake yourself out, because the next person they talk to, they may say, what a great fan Steve is of this particular political person, or Steve don't really like that particular person. And they're out there talking about what you do and don't like, and the people they're talking to may be so radical, they will start hating you just because of what this other person said. It's incredible. So try to keep the politics out of it. Same way with religion. And I speak religion time to time, but trying to encourage and such as that, I'm not ever throwing off on other people's religion. It's not my place to do that. But I know that it's important to me because it helps me. And those things that help me, I try to pass it on to the customer that it may help them as well. But that's thin ice, and I know it. And you have to handle it very, very carefully. Don't walk into someone's office or into someone's space when they're on the phone so that you hear what they're saying into their telephone. Back away and give them the privacy. Even a cell phone. Even if they encourage you to come on in and sit down, don't do it. Say, I'll wait till you get off the phone. They may not understand it, but they will appreciate the fact that you value their privacy. A lot of folks don't do that anymore, but it is a good, old school, fundamental thing to hold on to. When you value their privacy, then when you're in a relationship conversation about business with them, they'll be more apt to pay attention to what you're saying and appreciate the fact that you don't think you tell everybody everything you know. When you're in a room with someone else and they're on the phone, you don't know where that conversation is going to lead. And before it's over with, the person that's on the phone may be saying, I wish he wasn't sitting here. I'd say something different. And that's a negative type thing going on. So keep that in mind. Never consider that your business is in the bag. This order, I've got it nailed down. I know I'm going to get it. Don't count your chickens before they hatch. We've all heard. If you're working on a deal and you're not hearing back from that customer in a reasonable timeline, you get back in touch with them. It is better that you make them feel a little bit uncomfortable, as long as they know you're in it to win it and you really want their business and would really appreciate it. There's nothing at all wrong with saying, I've been waiting all week for you to give me a call and give me that order, and I just can't sleep at night. You ready? We can close this deal right now? It'll make me feel better, and I know it'll make you feel better because you won't have to worry about it for the weekend. That's not bad. That's a good sales point, because one, you let them know you care. Two, you let them know you're on top of it. And three, you're going to get the information you need. I hope it's good information. They're not going to tell you, you should have called me yesterday. Well, I closed a deal yesterday. Okay? So keep that in mind as well. Urgency. It's a big word in entrepreneurship, especially in sales. If you got a chance to make a sale, do it. Customers are impulsive and they're fast, and they will jump from place to place in a hurry. Your competition is alive and hungry and active. Don't think you're the only player in the game. So you return your phone calls, you return your emails, you check them in the morning, not at night. You make sure that you know if you've got customers waiting for you at the door, which is the same as a text or a phone message waiting for you or an email. That's having a customer at your door just waiting for you to answer and do business. Be a problem solver, be on top of the game. Customers will appreciate it. During the last five weeks, probably, I've had at least 10 customers tell me when I called them back or answered their email, "Oh, Steve, thank you for calling me back. You can't believe how many people just don't return phone calls anymore." They tell me that. It's amazing to me because when I do, and we've got just the fact that I called them back, put our relationship on a positive go forward basis, that's pretty easy to do. So it's important. And apparently there's a lot of people in the world that don't answer emails, that don't return their phone calls. That's not going to be one of y'all, is it? Nah, stay on top of your business. Now that gorilla out there in the jungle, he knows all about guerrilla marketing, selling, relationships, and what it all adds up to be is bend the rules and push the trees over till they break. Gonna do whatever it takes for survival. It's survival, and sales is survival. And I'll take it just that serious. So let me give you some ideas that might help you with that. You don't want to ever give away all your information. As I mentioned earlier with Janae's web pages, you want to hold on to the information that people can use, not against you, but use to go get other quotes or help your competition or give them insight into a private area of the nature of your business. You always want to maintain some privacy, some knowledge, and expertise and savvy that you don't share with everyone. That's you. That's what makes you special. That's what makes you good. But you'll figure out what they need to know. What they need to know is you're bringing them a complete package, a happy day, a happy time at the end of the day. Let me tell you, so very important. Be smart here. Give them a great first-class presentation, work of art, but don't give away the key ingredients. Don't itemize issues like freight cost and service cost and things like this that you don't have to, because the customer will look at that and say, well, maybe I can save some money here by doing it myself or getting someone else to do this part or that part. When you start giving a detailed itemization, you're opening yourself up. Now, you can itemize a lot of items like freight cost, like shipping costs, as long as you're giving options. As long as you start giving options, then it's not take it or leave it. It's let's talk about this. So there are certain things that you would include in quotations that will promote the sale and promote you getting the order. But I'm sure there's other things that will hurt you, and you don't need to be too specific about that. When you have a chance to make a sale or to create a promotion, a relationship with a customer, you need to consider this is just not general conversation. This is not just chit chat. Your business is on the line, and it needs to be a pitch. When you're selling, when you're talking, it's at A, B, C, always be closing. You're going to keep selling on your mind because you don't ever know that customer may be ready to make a purchase right now. Last Friday, I had a customer give me a phone call about midday, called me by name. He had been on our website, seen the videos, done his homework apparently. He said, Steve, I'm interested in getting buying one of your balers, a hay baler, about $6,272.49. I'm interested in buying one of those. Well, most of my calls can start out like that. And I'm figuring them to want to know this and want to know that and such as that. So I went into my little pitch about what we can do and serve you. I don't need to know this. He said, no. He said, no, Steve, I've read all that. I feel very comfortable with what you said on the internet and with you. Your testimonials are good. He says, just tell me where I need to send the check. He said, are your prices still current on your webpage? I said, yes, sir. He said, well, just tell me how to fill it out and where to mail your check, and it'll be in the mail today. Wow. I hadn't had that to happen all year long. I mean, he called me up ready to write a check, and we hadn't spent 40 seconds talking on the phone. That's incredible. And there's customers out there that can do that for you too, I'm sure. I hope some more will call me, because if you've got good presentations at your website enough to create trust like that, and testimonials to create trust like that, and videos that create a relationship even though you haven't met, but you feel like you know someone based on all you've heard them say and what they've said and what other customers and videos have said. That's kind of a win-win situation, isn't it? Well, it sure made me happy, and I'm glad to be able to tell you. But I was ready. I was going to make a pitch. Yeah, and I closed a lot of sales just like that. It'd take a lot longer, but he took the pitch that I made with what I was seeing online, and it worked as well. So when you're talking with someone, it's not chit-chat, it's sales. So just remember that. When that opportunity comes, be ready to go professional and to close that sale. Don't give away the names of your vendors, subcontractors, manufacturers. In the age of Google, if I know who your manufacturer is, you're trying to sell me something, and I log into their website and they'll sell it direct to me, and I can cut you out, I have an obligation to do that kind of. And everyone knows that. So you have to protect your private information, because even your best of customers are going to shop. They're going to negotiate. They're going to look for the best deals they can find. And I want you to do the same. So don't give away information that's going to make the business go away. And so many people are apt to do that. So be very careful. When we're wrapping up a deal or talking with a customer, especially with big ticket items, some people just cannot say, yes, I'll take it. Even if they want it, they're making the physical move and the commitment to come out loud and say, yes, I'll take it, is a part of the anxiety that folks have when they've saved their money or they've thought a long time about buying something and it's been on the edge all the time. There's a lot of reasons to do it, but they've held on to some reasons not to do it, and that's an anxiety issue. And it gets right down to the bottom line. When you're closing, some people will just tie themselves up and just don't want to turn loose of the money, don't want to obligate for the obligation they're getting ready to do or go into debt, and it's serious. But we have to thank as salespeople here. We've done our job, we've done our marketing, we've got them to the bargaining table, we've been negotiating, things have been going well, but you see there's a lot of anxiety there, and there's a real good reason that 10% of the people selling make 90% of the good deals. Only 10% make 90%. And the reason that is that 10% know a few things, like I've been sharing with you. And here's something else that they know. We got to get people over that anxiety on the big deals, or they won't make them, or they'll keep shopping and talk with someone that knows how to get them past it. It is so serious that sometimes people would come in to buy from you, or you're trying to close a deal, and they just get so excited with anxiety they just can't do it. Maybe don't cry like this little girl on the screen, but you can see that things are getting tense, and maybe they're going to back out. They're just not going to do the deal, even though they want to do the deal. So how can you get past that? Here's some tips that'll make a lot of difference. Make sure your presentation is like a work of art. It's professional, it's well done, it's complete. As we said last week, you own the preparation. You have prepared, you forecasting how things are going to go, probably go. You know your ranges of bargaining back and forth, as we talked about. But the documents that you use are ready to do business. It's not just a clean sheet of paper that everything's got to be scribbled down and look sloppy and non-professional. That ain't gonna cut it with a big deal. You want to be first class, show that you're prepared, have your frequently asked questions ready, such as that, and know how to say it. Now, in your quiz, you were asked about who is this fellow, Dr. Mesmer? You ever heard of him before? Well, he's been around a long time. He's been gone a long time, but his work still remains today because he gave us the word mesmerize. And y'all got that on your quizzes, I'm sure. Mesmerize, to hypnotize, entrance, captivate, dazzle, bedazzle, enthrall, fascinate. I can't think of the word mesmerize without thinking of my grandson, Colin, who I love so dearly. And when he was a little kid, 3 and 4, 5 years old, he'd sit in front of that television with SpongeBob SquarePants, and he would be there. I mean, he was fixed right there watching that. And no matter what I would say or do or what else was going in the wrong, Colin was watching SpongeBob. Of course, my wife says I do that with football games even now, but mesmerized to the screen. And you know what? I don't pull that word into this conversation tonight because the salesperson that knows the importance of mesmerize, that's the person that closes the deals, the questionable deals. Because in a sales presentation, it's like a drama, the movie or on stage. People, you have to have things prepared and set up to create the atmosphere to close the deal. Now, when a good minister is talking at church and closing a great sermon, he has prepared that choir to sing just the right songs, hymns, just the right tunes, using the right words. He has that organist tune right in that when he gives them a key, they start playing some background music for him to nail it down for that altar call or to make his point. You have to do that, and I have to do that when we're selling and closing. Have to use those same techniques because that minister will get you to the point that he will use the voice and signals and gestures so that a pin could drop in the room and we will hear what he has to say. That's what we're after, the same type of stage. I relate it to the aha moment. And that's when we have our baby and they're crying their heart out hour after hour, will not hush. Oh, the noise, it's amazing how much noise that little thing can make. And we rock them and do all we can, walk with them, put them in the car and drive around the block because that might put them to sleep. But they just keep screaming hour after hour. But then there will be a moment that comes when they raise that little three-pointed lips up that's so beautiful and look you in the eye, and all of a sudden they just stop and say, ah. And we know that in just a second they're going to be asleep. And what happened? They gave up. They released those anxieties and said, well, maybe things aren't so bad. I'll go to sleep. Well, shucks, I'm tired of crying and raising Cain, so just, I don't relax a little bit. I don't let go of those anxieties because things are really okay. I was just making a lot of noise. That's the aha moment. And you know what? To get that aha moment with your client, with the person you're selling to, it will come too when they have decided and you've talked to them, making gestures, talking low, looking them in the eye, and stealing to certain moments by changing, lowering your voice or using silent points to do it. But by doing this and working and shaking your head and moving your hand gestures in such a way like you're shaking hands, they will decide that they like the seller and they trust you. And you've already convinced them by what you said that they really need to buy this thing, that you're a sales manager and you have convinced them this is a great price value. It stacks up to all the competition. And because you are such a good salesman and got their attention and convinced them that this has a good reputation and a great warranty, that by golly, it's time to buy this thing. And you're shaking your head like this, and you've got your piece of paper that's been well prepared right there. And all of a sudden, you've been talking to and you're shaking your head, and you know what you notice? They're looking at you and they're shaking their head like they're agreeing with you too. Well, that is the aha moment. They will send you those signals that, okay, I'm relaxed. You can stop selling and start closing. And when that is happening, then you automatically put your hand up there and you say, well, let's shake on it right here. Or all you need to do is just sign, put your initial right there. Or I know you're ready, just give me the nod that I can go ahead and close this deal out. And they will, you're nodding your head, they'll nod their head too. And you got the order, you got the deal you made to sell, and they never had to say, I'll take it, or yes, I want to buy it. Because those nonverbal communications are just as effective as the words that you say, and sometimes more so. When you do that, they're breathing easy. They will give you the nod. They will give you the order. They will sign their initial or their signature, never have to say a word. And you can rest and be quite confident that they did it because you were a skilled 404 sales master. And you'll get real good at it. You have to practice. And each time you'll learn a little lesson here and there. But they'll breathe easy, give you the nod, and buy. They will buy the stuff. So practice that as you're working on it. I want to congratulate each of you for the race that you're in. You're winning the race right now. You're winning the race because you're still in it. You'll learn real shortly as you get out in the business world that people are going to tell you no a whole lot more often than they tell you yes, especially as you're first getting started. That's okay. That's just the way it is. Take it from Papa Steve-O. It'll change in time that you'll get more yeses and less nos. After 64 years of doing it, I think my ratio up now is I get more yeses than I get nos, and I do a lot of quoting, and that's very rewarding when you can do that. Some weeks are wide open, and some weeks are just like somebody cut a spigot off, and there's no rhyme or reason to it. But if you've got the Golden Goose marketing campaign and you're doing your marketing and you're sending out those constant promotions and you got good profit centers, it'll come. You can rest easy, you can sleep. I'm going to tell you right now that unless it's a real weird situation, you'll be all right as long as you've got your foundation in doing the things you're supposed to do. Winning the race in entrepreneurship, as we've said before, is not becoming a billionaire. No, winning the race in entrepreneurship is getting to the finish line. And all of us have different finish lines. That's okay. You establish them as you go and then get to them. Find the endurance to stay in the game. You win this race by staying in the game and finishing the journey. That's what you do. We respect every person. We set high standards. We earn trust, foster partnerships, embrace excellence, keep our candle burning so that we show light to people, show warmth to people, and make things work. So it's been a pleasure to work with you. In the next week or so, we'll be doing the certificates, and I'll be in touch with everyone. We'll maybe have a special presentation one night and salute everyone online. Sarita's going to help us do the certificates this year, so we'll mail them to you, or maybe we can figure out a way to have a meeting somewhere and hand them out in person. So thank you so much for being with me and showing me, giving me so much gratification by seeing the work that y'all have done. It's just been very impressive. So I want to say, God bless you. Thank you. I hope I'll see you in the next lessons and look forward to working with you in the future. Let's stay in touch. Any comments you'd like to make, I'd like to hear from you. I'm glad to see that y'all shared information on the chat board. Looks like you're working back and forth with each other, and that's a good thing. If there's any questions or things I need to answer there, you can bring them up to me now, or I'll answer them for you tomorrow after I get a chance to read these comments that you've made. Anyone want to say good night or make a comment?
Good night, Steve.
All right, Sarita.
Good night.
Good night, everyone.
Good night, everyone.
Good night.
All right, sounds like the Walstons. Good night, John Boy. Y'all take care. We'll see you next time.